All right, guys. So we want to sit down and talk to you about one of the biggest problems we see people facing today, which is how to get out of debt. When I mean debt, I'm not just talking about credit cards. I'm talking about if you've got mortgage payments, if you got student loans, if you got car loans, if you got credit cards, if you got personal loans, if you got business loans, any kind of debt. So let me give you an overview of what we call the debt action plan, which is going to show you how you can get out of debt faster than you could on your own. So what we're doing, guys, is I'm just setting up the basic account for you to see and then explain to you how this is all going to work. All right, so now what we're going to do, guys, is we're going to go over here to what we call the debt action plan. And we're going to create the new scenario. This is just like we would do anybody. So let's talk about mortgage. So let's just assume you got a couple mortgages, okay? Let's say you got a mortgage with Wells Fargo. So you got a Wells Fargo mortgage, all right? It's a fixed rate. We know that you got a $350,000 on the mortgage. That was what you owe currently. We know you were smart, so you got a really good interest rate. We're gonna say it was 2%. And we're gonna say your monthly payment you're paying right now is $1,295, as you can see. And because someone told you that, you want to get out of your mortgage as fast as possible, you decide you're gonna pay, you're gonna give it another $250 a month to your mortgage. So that gives you an extra. And as you'll see, we're gonna put that number of this monthly redirect. That's the same number you're using as overage. So we're not gonna take any extra money out your pocket to show you how to get out of debt faster. Now, let's say you actually have a second mortgage. You got a different property. Maybe you have a vacation home, and maybe that's with US Bank. And maybe this isn't a big loan because maybe you have already had it for a while. You've been paying on it for a few years. But since you've had it for a while, you've been paying on it, you got a different interest rate. Maybe you got 6% as the interest rate on it. And your monthly payment on it right now, you're paying $900. But because you're trying to get it paid off again, you're trying to accelerate it, you might be paying an extra $250 to that one also. All right, so now you've got a total of $500 you're paying extra towards both in mortgages. So we just taking that number and we're putting it right here for you. And let's say that's all the mortgages you have, okay? Let's go to credit card debt. Everybody has some form of credit card debt probably. So let's say you got a Visa, right? And let's say your Visa, you don't have much on it. You only got $5,000 as a principal balance on it. You've got good credit, so you've got a 12% interest rate on it. And it says your minimum monthly payment you're paying to it is $100 a month, but you're paying, because you want to pay it off faster, you're paying, let's say, maybe you're paying $135 a month. We'll just use that, 35 extra. All right. And now you got another credit card. Maybe you got a department store card because, people like to shop at like Kohl's or somewhere. So we're going to call this department store card. And that card, you have, let's say, $2,500 on it. And the interest rate on that is still decent. So maybe it's another 12% interest rate card. And you're paying, your minimum payment on it, you're paying $50. That's what your minimum payment is. And you're required to, you're probably paying, let's say, for 50, let's say you're paying $75. So you're paying an extra $25 there. Let's say you have an American Express also. We'll use an American Express. A lot of people has American Express, so let's add American Express in there. And your American Express, you happen to have a little bit more balance on them. You got $15,000 on there. And American Express, your interest rate on there is, let's say 15%. Okay. And you're paying to the card, you're paying $338. That's your minimum payment a month. But you're paying, let's say, because it's a higher balance, you're paying $500 a month. Okay. So that gives us a total of $710. So you got $222 that we're spending extra towards our payments on our credit cards right now. And let's say in your case, you have investments. And in your investment, let's just say it's a 401k. Let's just use that. It's a qualified account. You've got about, let's say 100,000 in there. And you're contributing monthly, you're contributing, let's say 500 a month to it. Okay, and we're not going to use your, because it's qualified, we're not going to redirect that. It's going to allow us to redirect the 500. We can change that because maybe you say, you know what, I want to keep part of my 401k, so we'll just take 250 from there and add that to this number. Now, with the other income sources, let's say you got a paycheck, that's all you have. You don't have any extra income coming in, and you make about, let's say you make $7,000 a month. Pretty average income for a household. All right, we're not going to redirect any of your check. Actually, we're just taking the payments you're currently paying. You don't currently have any insurance other than what you have at work. All right, we're going to move the savings account down to 0. We're going to move this down to 80. And how do we want to pay down the debt? We can do a snowball, which is the smallest balances first, or we can do avalanche, which is the highest interest rates first, or we can customize it. So let's go ahead and just do snowball in general. That's what most people would do if they're doing like a Dave Ramsey's. And let's just say, since there's $972, maybe you don't want to give me all that. So let's say you only give me a portion of it. So let's see. Let's see, you give me, let's do 600. Let's take 600 from that. So I'm going to use this report with 600. Takes a few minutes for it to upload. All right, everything is uploaded. So if we look, your current total debt right now, based on what we've inputted, is $522,500. Interest that you would pay on your plan is $207. And our debt plan shows that your total payments would be $730 versus your current would be $711. And we show we would get you out of debt in 19 years, 3 months versus your 23 years, 9 months. Now, if we go over here and we actually look at it from a different stance, we can actually look at how each of the payouts work. We're just loading your comparison right now so you can see between what you're doing and what we would do. So all the numbers kind of look the same: current plan, your principal, your interest, your total payments, they're a little different. All right. Your plan is the blue button. My plan is the green button. So if we look here and we go to the first year, we have already paid off one of your debts. We paid off the department store card. Okay, you still have a cash of $5,000. We took a loan for $2,000, and that means you would net out $3,000. Okay, let's look a little further in. We go in 3 years, and now we've paid off the department store, the Visa, and American Express. And you haven't paid off American Express yet. You haven't paid off the Visa, and you haven't paid off the department store card. So let's go into 6 years. Let's go into 10 years. 10 years, we've paid down $142,000 in debt. You've paid down, looks like you have 217 left. We have 142. let's go down to here. Okay, our debt action plan has now gotten us to 370,000 in total. Paid off the department store, paid off the Visa, which you've done also, paid off American Express, and we've paid off US Bank. Now, 3 months later, we now pay off your mortgage. So in 19 years, 3 months, we've officially paid off all your debt. Yes, you see that little policy loan of 122, but you see the total assets means if you walked away right now, you'd have 35,000. Now, let's look at it from your standpoint. So from 19 to 23, that means we still have another few years to pay that you're working on your plan. So let's look at it from your plan. We'll go forward to your plan and see how much money we have. Now we've accumulated, we have $191,000 in our assets, while you have just now paid off your debt. So we're 100% debt free, and we have almost $200,000 that we've collected in the process. And guys, that's pretty powerful. But let's take a look at it from another angle. Let's generate a report. And let's let you look at the report. Now, remember, we did have a total of $900 to work with. I chose not to use all of it. Now, when you look at your report, guys, this is a disclaimer, but it says in your report, this debt plan uses modern banking principles to quickly eliminate debt and build wealth. Rather than focusing on diminishing your lifestyle to get out of debt, this strategy shows you how to significantly reduce your interest you pay, reduce your tax burden, and build wealth in a way that creates tremendous cash flow. Guys, it is not magic. It is just math combined with a few incredible strategies that can significantly change your lifestyle over time. So using the information that you provided, we have compared your current payment plan with the strategies outlined in our debt action plan. Below is the savings you can expect when implementing our strategies. So with our plan, you could save yourself $708 in interest and become debt-free in 19 years and 3 months. Whereas with your plan, you would still be in debt for 23 years, 9 months. Now, if we go and we look at it, the reason why our plan works is because inefficient dollars are being redirected. So with the debt action plan, you won't be spending any additional money each month. This is where we found the inefficient dollars. So we found money in your debt, you had $222. In the mortgages, you had $500. In investments, you had $250. That gave us a total of $972. So we didn't take all of that. We took only $600 of it. So we left you with $372 left over. Now, if you look here, these are the balances, these are the accounts you had with all the balances and the interest rates and what your monthly minimum payments are, what you're currently paying, and how long it's going to take you to pay them off, doing it your way. Now, what this is our plan. And using our debt action plan, you will be 100% debt-free, 19 years and 3 months instead of 23 years and 9 months. Even better, you'll become debt-free without spending any more money each month. So here are all your same credit cards and loans. There are your balances that are on the accounts. These are the interest rates you're getting. Those are the minimum monthly payments. This is when your current payoff date is on your plan. This is our payoff date for your plan. This is how much time you have left based on our plan to pay each one of those off. This is the payoff amount that we're going to pull from our special account that we set up to pay those off. And then these are the payments that's being redirected. And then this is the interest that you're saving accordingly. Now, guys, turn your debt into wealth. Now that your debt is completely gone, use the money you were spending on debt. That can make your money work for you. So after 19 years of spending money, now in 20 years, you're projected to have $65,000 in cash after paying off all your debts. In 30 years, you would be projected to have $476,000 in total assets. And in 40 years, you would have projected to have $800,000 in total assets. So guys, if this has been of interest to you or useful, or you think it could help you in your situation, it would behoove you to reach out to us. As you can see, our contact name is here. Our info is on the bottom of each one of these pages. As you see it right there. So feel free to reach out if you'd like more information or you'd like to see your numbers personally. Where